Welcome back. Today we have a lot to discuss. We're going to be talking about the Cardano ADA price potential breakout in bullish pattern that we are seeing. We're also going to be talking about shorting Bitcoin with 40x leverage. Obviously, not a great idea, but we're going to be discussing kind of what this means for the market and what this possibly could indicate about where the market is going. We're also going to discuss MicroStrategy running out of money and many other topics in today's video. So make sure you guys are subscribed to the channel. That way you never miss a new video. We upload as much as possible to bring you the latest happening in the financial world, and also give the video a free thumbs up, because thumbs up are free, but crypto is not. Now, talking about not being free, 40x leverage and millions are on the line. There is a big bet going on against the Bitcoin price using 40x leverage. The trader's bet carries a notional value of approximately $379 million, enough to turn plenty of heads in the crypto world. And so effectively, all eyes were on this trader. The trader placed about $16.2 million into the decentralized derivatives platform, securing a high-stakes Bitcoin short position with 40x leverage, right? So he deposits $16.2 million, and now basically has a position size of $379 million. Now, here's the deal with leverage. A lot of people don't necessarily understand. Now, these are probably very wealthy individuals or actual traders on the market. And remember what we talk about when we're talking about trading specifically. A lot of these traders, they place these very, very high risk bets, but they get a very high risk return. It's the same kind of thing of like poker players or people who go to the roulette table as kind of like professional gamblers, right? They're taking these very high risk bets, but the payoff, you would imagine and hope, will offset any of the losses that you have. The same thing happens in the crypto market, the stock market, right? You're not going to win every single trade. This is where a lot of people get messed up and start to lose money, because they think that they're going to win every trade, because the person on YouTube or the person on X or the person on Facebook, they're all saying that they can never miss a trade and they're doing amazing. Well, everybody misses trades, and to be honest with you guys, from what I've gathered from my analysis and research of these markets and traders and people who've been in these markets for years, is that really most traders, they make one really, really good trade maybe every 5 years that really kind of offsets all the losses that they've had. And so this is very interesting to see that there is shorting going on in the market, as the price of Bitcoin and crypto are kind of wavering, and many people are already calling the bottom. Maybe the short is, to kind of offset that. Maybe it's to kind of squeeze the market higher, right? Sometimes the traders may do that. I don't know, but 40x leverage is really not the smartest thing to do, because the thing is to remember, back in 2017, 2018, even 2019, there was like still exchanges that allowed 100x leverage. And basically what that means is you could put $1,000 in and you get a $100,000 position. But then the thing is, you have to essentially divide that by 100. And so if the market moves 1%, right, you have a 100x leverage. 1% of 100 is 1. So if you have a 1% move in the market to the downside and you're longing it or short and to the upside, your entire position gets liquidated, right? And you could lose all that money. So to most of us looking at this are saying $16.2 million, this is crazy. But if you're in the hundreds of millions of dollars, $16.2 million may not be that much to kind of risk for a potential high return trade. Now, why would they be shorting the market at this point, right? Because we've already seen crypto ETFs, ETPs with $1.7 billion in outflows, longest streak since 2015. We've been talking about this pretty much all of February since I came back on this channel. Look at the Bitcoin ETF flows throughout the end of February into early March, right? This is from Farsight Investors. And you can see pretty much every single day, besides maybe 3 days out of the last 2 or 3 weeks, have been negative days, with February 26th with $754 million in outflows out of the Bitcoin ETFs, which means effectively that they are selling the Bitcoin, right? And then 275 million, then a little bit of a bump. downward, downward, outflow, 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 inflow, very small inflow, outflow, outflow. So this is going to continue, I believe, until we see some type of reversal. Now, where the reversal is, I don't know. I think we're seeing a lot of money coming out of these markets. Number one, we are approaching tax season. Number two, there's still a lot of uncertainty with the whole tariff and trade war situation going on from a geopolitical and geoeconomic standpoint. But remember what I tell you guys. This is outflows. And I believe a lot of these outflows that we're seeing from the Bitcoin ETF and even the Ethereum ETF, you could see here on the Ethereum chart as well. Let me make this a little larger. You can see in the end of February, outflow, 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 inflow, outflow, 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 outflow. So basically, out of the last 2 weeks, only one day of inflows, every other day is outflows. And the market cap in Ethereum's ETFs is much lower than in Bitcoin's. That's why you're seeing probably more outflows coming. But when all of this money that is coming out of these Bitcoin and Ethereum ETFs decide to move back, even if it's a fraction, right? We've had, this article says 1.7 billion. I've seen other articles quoting 5 billion. So anywhere between $2 and $5 billion was outflowed, right? Even if you just take 1 billion of that and inflow it back into the Bitcoin ETFs, where is the liquidity coming from, right? Well, we know that a lot of the liquidity that they're selling into is going to large institutions, countries, et cetera, who are buying Bitcoin. But on the other end, when you start to buy and there's no outflows from these mega ETFs, where is that liquidity going to come from? And so just this past weekend, we heard from MicroStrategy or Strategy, Michael Saylor's company, and it says Strategy has acquired 130 Bitcoin for $10.7 million at $82,000 per Bitcoin. And so now their average cost is $66,360, and they're almost at 500,000 Bitcoin. Now, you may be saying, why is this such a small amount? Because it is. This is a very small amount of Bitcoin compared to what they normally are buying, thousands and thousands of Bitcoin. And why are they buying less now that the price is lower? When the price was at $100,000, they were buying significantly more, right? This doesn't make sense why they're buying high and buying the top of the market. And then when it dips, they're buying very little. Well, maybe they're testing the market's liquidity. And what exactly does that mean? Well, if we don't have any known major buyers like MicroStrategy in the market, and we are continuing to see outflows out of the Bitcoin ETFs, Michael Saylor and MicroStrategy potentially, and maybe this is not what they're doing, this is just speculation, just my opinion, do your own research, but potentially what they're doing is they're testing the liquidity in the market. They're seeing if, hey, maybe if we buy some, let's see kind of how this affects the market. Does it completely turn around the market? Are we going to see more selling because they anticipate MicroStrategy is going to be doing more buying and they don't want the price to go up? I don't know. Remember, my thesis is that Wall Street is in control of these markets now with these ETFs because they, as MicroStrategy is buying, hundreds of millions of dollars in Bitcoin, they could be selling the Bitcoin from the ETFs to offset any potential price gains due to lack of supply. But then when the ETFs want to buy back in, where are they getting this liquidity from? And this is why I think that it's potential that they're kind of testing the liquidity in the market, because if the ETFs start to see MicroStrategy buying, let's see what these ETF issuers do. Are they going to continue to sell? Are they going to reverse and buy because they believe that if they kind of buy and MicroStrategy is buying, well, eventually the price is going to go back up because, again, where is the liquidity coming from on the sell side? Anyway, the market is kind of wavering. There's still a lot of concern about this kind of Bitcoin reserve. There was a lot of anticipation and speculation that we were going to see a government-issued Bitcoin reserve where they're actually buying Bitcoin on a regular basis, and that's not what we've seen yet. Now, again, I say yet because eventually we will see it. I just think it's going to take a lot longer than most people are anticipating, and the market is repricing based on this new information, I believe. We're also hearing other areas of the world. Bank of Korea says to take a cautious approach to the Bitcoin reserve. The Bank of Korea says it's taken a cautious approach to potentially including Bitcoin as a foreign exchange reserve. Officials from the Korean Central Bank said in response to a written inquiry that they have not looked into potential Bitcoin reserve, citing high volatility. This is interesting that they still think there's high volatility. This is not high volatility. High volatility would be 50% moves in one day regularly, and we're not seeing that this cycle. Again, due to the Bitcoin ETFs, due to the institutions having a hand in the pot, right? But there is still a lot of areas to that you could potentially make good money on. There's a lot of areas that are expanding outside of just crypto, right? So they have a more diversified portfolio for their businesses. And one of these areas is the Bitcoin mining industry, right? BitDeer has now launched the Seal Miner A2 Pro Bitcoin mining machines. So we've been talking about BitDeer for quite a while, right? A lot of them are now putting machines online to kind of make their Bitcoin mining operation more efficient, which is amazing because if you remembered in the previous cycle, there were no Bitcoin mining machines available. So a lot of these Bitcoin mining companies were pre-ordering them. And then what ended up happening was they bought them and pre-ordered them in the bull market where they were overpriced and the supply was very low. And then they delivered them in the bear market when energy and electricity was more expensive and the price of Bitcoin was lower. So, what did we see? We saw a complete wipeout in the Bitcoin mining industry during the last bear market, just the last few years. But now they're all building up and now they're all kind of expanding their operations, not only to Bitcoin mining, but also to AI and high power compute. And remember, BitDeer is heavily owned also by Tether, and Tether potentially is going to become more of a US regulated and focused company, potentially. And this could bring BitDeer into the US kind of realm of ownership and potentially bring all of their operations to the US because they're not a US based company. I think Singapore. I do think they have operations in the US, but I think their company is outside. So there are definitely areas that you can make money in this market, guys. And we just have to kind of understand that there's a lot at play here, right? The YouTubers, the influencers that are telling you, oh, retail isn't here yet. These people are not realizing this cycle is a different cycle, right? Retail is not in control anymore. It doesn't matter how many people, like everyday people, everyday people going into low market cap coins outside of the top 100, like, Floki Inu number 86, like literally, they can push the price up substantially because these are low volume coins with low market caps. I would imagine like during the next AI run, you're going to see like low market caps like Humans AI. It may not actually have a product, but because it's called AI, everyone's going to be running into it saying it's less than a penny. It's going to go up to $1. Very low market cap. And look at the volume, $108,000 in the last 24 hours, right? So if you had a GameStop type situation where Wall Street Bets tells people, oh, maybe look at this coin, and then everybody goes and puts $1,000 in. Yeah, it's going to drive the price up substantially, right? But it's also going to dump substantially as well. Just as hard as it pumps, it's going to dump. And this is why we have to look for, sound assets in the market to invest in. Now, what those assets are, well, that's for you to make the determining factor for your investment portfolio. I don't give financial advice. Nothing I say is financial advice. These are just my opinions on the market. And I don't even really talk about, like what I am buying, what I am holding, which I'm the most bullish on anymore, because it's really a personal decision, right? I may say that Bitcoin is the best, and you may say, well, it's good, but it's not the best, right? XRP is the best, or Solana is the best, or whatever. That's fine, right? Everybody has their own investment thesis and strategy. Mine has been look at the Bitcoin mining companies, look at the MicroStrategies of the world, the Bitcoin proxy stocks, as we call them. Look at the cryptos that are going, like the fundamentals should be able to push the price higher in a bull run, not just based on hype. So these are the things that we look at in the market. Anyway, talking about whether it's a good investment or not, Cardano, this is an article from CoinDesk where they say a deep dive on the Trump Reserve token whose blockchain ignores TVL. Now, I was reading this, I'm like, wow, the Cardano community is not going to like this because they're going to say, wow, this is a fun article. But it's really not a fun article, to be honest, because they actually talked with the Cardano Foundation executives. And so Cardano's trading volumes have exploded with daily figures averaging around $720 million while exceeding an average of $1.4 billion in March. The rise was spurred by a social media post by the president mentioning ADA as one of the tokens that he wants to be included in the nation's strategic crypto reserve. But what we also saw was not only that big pump in the price, but then a big dump in the price, which tells me that the traders are in Cardano, right? The same way that we're talking about Wall Street controlling the price of Bitcoin and Ethereum through the ETFs and through purchasing and selling those, the traders are trading. Like, guys, we are in the bull market. We may not feel like it, but we are. And people are trading the market, right? I've been watching YouTubers, and not Cardano YouTubers, like trader YouTubers, who a few months ago, when Cardano was 30 cents, were saying, we're buying here, it looks good, looks good, looks good. And again, this is from a trading perspective. And so they bought at 30 cents. It went up to $1.20, so basically like almost a 4x. And then they started selling off. They were probably selling into this run as well, but the Cardano community kind of got excited and they started buying, and then the volumes picked up, so this pushed the price up, but the traders started to sell. Same thing happened after the Trump tweet. You guys can see right here. We were at about 65 cents. Trump tweeted, and it went almost doubled in price, but then immediately came back down, and now we're basically pre-Trump tweet. Again, a lot of this because the traders are in the market. They're selling into these pumps. And so any of that liquidity that's coming in, any of those inflows, they're eating up. It's the same thing that's going on here with the Bitcoin ETFs, guys. As MicroStrategy is purchasing Bitcoin, the ETFs are selling their Bitcoin. Now, keep in mind, a lot of like hedge funds and stuff like that, they own these Bitcoin ETFs. So they work, whether directly or indirectly, right? They're the ones making the market, right? So as MicroStrategy is buying, there has to be supply on the other end, otherwise the price just keeps going higher. And so the Bitcoin ETFs sell into that buying that MicroStrategy is doing to keep the price wavered or even go down. That's why after pretty much every MicroStrategy buy, we see the price of Bitcoin go down shortly thereafter. And so potentially the same thing is going on with Cardano from a trader perspective. But anyway, there's a lot that's going on here. But there's also, the Cardano ecosystem for many years has effectively ignored a lot of the metrics that are used throughout the blockchain ecosystem to identify, whether the chain is performing, not performing, the usage standards and stuff like that. Two of the metrics that Cardano kind of ignores is TPS, which is transactions per second, and also this TVL, or total value locked in decentralized finance. Now, I'm going to be doing a full video on this specific topic where we're going to go more in depth on the actual data. For this video, we're just going to kind of review what's going on and what the Cardano Foundation CEO said. So Cardano also has $329 million in TVL, or total value locked, although the Cardano Foundation CEO believes this metric is overemphasized by crypto communities. Instead, the Cardano Foundation CEO points to non-value transactions associated with people conducting real-world, albeit non-financial activities on the blockchain rails, like minting decentralized identity, tracking metadata, recording documents, that sort of thing. Cardano is a hotbed of such activity, according to the Cardano Foundation CEO. He said, quote, "I'm fighting to ensure that 50% of the activity is a non-value transaction." One example of this is Cardano's partnership with Veritree, which saw the Cardano community donate over 1 million ADA tokens to plant 1 million mangrove trees in Kenya, with each donation verified and tracked on the blockchain. I mean, have these actually been planted? People have gone and seen them? I don't know. I'm just asking. But I don't necessarily know that, like, he's counting this as a non-value transaction, like a real-world use case, right? Because you're kind of NFTing the tree, right? You're putting identity on the tree so you can track it, see how quick it grows and all that stuff. But is this what people are using blockchain for? Is this scalable, right? This example, Veritree, is from the previous cycle. I think from maybe even before the previous cycle, maybe the last bear market, 2019, 2018. So this is from a while ago, right? But if they already planted the trees, or they're still planting the trees, like, that's one use case for this. But has it caught on, right? Because if it hasn't, This has always been my thing with the Cardano metrics, that they're like, oh no, our total value locked is not one transaction per second. We have 50,000 transactions in that one transaction. It's like, well, why don't you just metric it so that it can be viewed that way by the metric sites and by the data aggregators? Like, why don't they just do that? Instead, they keep fighting this battle about, oh no, that's not true. The Cardano transaction per second is actually more because it's an UTXO model or whatever. Like, nobody cares. Thousands of these cryptos utilize TPS as a regular transaction per second. Cardano's like, well, we're doing it a different way. Like, nobody cares, and just at a glance, it just looks bad because it looks like one transaction per second and it's not scalable. And so if you're kind of having that elevator pitch with an executive at a company to use this technology, and they're like, how many transactions per second? And you say, well, it's one, but it's different because they already stopped listening, right? Like, they don't want to hear the rest of it. And so the same thing kind of goes with TVL. And granted, again, keep in mind, this is one person's opinion. Granted, he's the Cardano Foundation CEO, but there's other people in the ecosystem that probably have a different opinion than what he's saying about these value and non-value transactions. Because TVL is important, right? This shows the actual activity on the blockchain. And it's not like Cardano hasn't tried to target this metric before, because Cardano wasn't even on DeFi Llama before a few years ago. And then the Cardano ecosystem said, no, we want to be metric. Like, we want to be charted out and ranked with the rest of the ecosystem to show how good Cardano's DeFi is. And now, a few years later, all of a sudden, we're not even looking at TVL because it's not important. It's not a value trend or whatever. Like, it just doesn't make sense, right? And a lot of the ecosystems do this, right? A lot of the ecosystems do this. Ethereum, they have a burn mechanism to offset some of the inflation in the Ethereum ecosystem. And people in Ethereum still say there's no inflation. It's like, no, there kind of is, but there's also the burn mechanism to offset some of that inflation. And, it basically offset the inflation because the number of Ethereum in existence is basically around the same that it was just a few years ago. Anyway, continuing on, Cardano Foundation also announced a deal with Serpro, Brazil's largest state-owned IT company, to accelerate blockchain adoption in South America. Serpro processes 33 billion transactions annually for 90% of the federal administration. Additionally, 8,000 employees will also receive blockchain training. Cardano's perspective differs from the likes of Solana and the slew of other layer 2s like Base that pride themselves on TVL and hype-driven movements like meme coins and NFTs. TVL and Solana grew from $2.2 billion to more than $10 billion in 2024. Cardano, meanwhile, zipped from a modest $445 million to $537 million in that same period. So this is where the data kind of comes into play, right? Cardano, for them to say that Cardano has not focused on hype-driven movements like meme coins and NFTs is complete bull, because the end of last cycle in 2021, I mean, pretty much all Cardano was, the big story was smart contracts, but nobody was focusing on smart contracts for Cardano because everyone was focused on NFTs, which was ridiculous because the smart contracts was really the technology that it was game-changing for Cardano. It's not NFTs, although some could argue that, but either way. So TVL and Solana grew basically 4x from 2.25 bill to 10 bill last year. So that 4x, 400% increase. Cardano grew about 25% in total value locked. And so the Cardano ecosystem is saying, well, this is not, it doesn't matter, right? Cardano Foundation CEO said his focus on real-world use cases, and the blockchain still boasts a bustling DeFi ecosystem under the surface, right? Remember, $537 million. This is still a lot of money, right? This is $500 million. Compared to these other chains like Solana, yes, it is much smaller. But I also wonder what the percentage is, right? So 10 billion in Solana, and granted, the numbers may be different now, but either way, 10 billion in Solana, and the market cap is 65 billion. So that's 1/6, which is about like 15%, 10 to 15%. I think 15%, if I'm doing the math correct. So about 15% of the market cap of Solana is in DeFi. Cardano, on the other hand, if it has 500 million and there's $25 billion market cap, that's, if I'm doing the math right, 1/50th, right? So 1/50th would be 2%. Let's just do the quick math on that. 25 407,854,469, $25 billion. We divide that by, or multiply that by 2%, and we should get about $500 million. Yeah. So this is a big difference, right? 15% of total of the market cap is TVL and Solana, 2% in Cardano. This is a big, big difference. And so, Cardano Foundation CEO is saying, well, it's not that big of a deal. And partly he's correct, because 537 million, this is a lot of money, guys. I mean, we literally talk about cryptocurrencies here that have less of a market cap than what Cardano has in DeFi. So take that into context when we're talking about these numbers, right? So Cardano's native DEX has a cumulative trading volume of $3.4 billion this month, with December alone notching a near $271 million, according to DeFi Llama. There's also a number of lending protocols, including Liquid, LendFi, and Optim Finance, with a TVL across lending sector exceeding $116 million. But the key part of the Cardano Foundation CEO's mission, he insists, is not to exceed the 50% level for financialized transactions. He sees it as staying in line with the Cardano Foundation's nonprofit ethos, even if it limits potential exponential growth of hype-fueled movements like meme coins. I don't know how the Husky token would take that, but here's the deal, guys. Back in 2019, 2020, I remember Cardano was talking about being the financial operating system of the world, and now they don't want to exceed 50% of financial transactions, which is it's not a bad thing. What I'm saying here, what I'm saying is they're shifting and they're pivoting the same way that other ecosystems are pivoting to AI, or the Bitcoin mining companies are pivoting from mining Bitcoin to high power compute and AI. Is the same thing it seems like the Cardano Foundation is doing here, pivoting from financial operating system of the world to, well, we also want real world assets. We really want non-value transactions, as they call them. Non-value transactions are basically transactions that are not just moving money, right? It's an interesting concept, but in my view, Cardano still needs to focus on the metrics that the rest of the ecosystem of crypto looks at, because if they don't, they're going to continue to be pushed behind by these other ecosystems that do, right? This is what we talk about in these technology field all the time, right? If one of the Bitcoin mining companies are not pivoting to AI, great. Another one will. And the other one that will is going to get more speculative hype. It's going to get more investment. It's going to get more developers. It's going to get more builders, because they want a return on their investment. They want to be in the best crypto out there. They want to be in the best competing crypto out there, right? Is Solana or Cardano ever going to get to number one? Probably not, right? So when you hear people say, oh, we're going to hit number one, they really mean like number one in the alts, right? Outside of Bitcoin and Ethereum and maybe XRP. But the bottom line here is, to get there, you have to be able to have that elevator pitch, right? With an executive at a top company. Once you get into the layer two of, well, the reason that we don't use TVL is because you already lost the person, right? You already lost the person. I've been in business meetings where you have business people who they don't really have that much time. Like they're meeting with a lot of people, they're doing a lot of things, and you go and sit down with them and they want to explain all these different, it's like when you watch Shark Tank and you see a really shitty product, and all the sharks are like, no, it seems like a shitty product, like nobody's going to buy it, like it's not investable. And they're like, no, this is totally investable, because here's why people are going to buy this product versus all the other thousands of products that are out there. It's like, no, like you missed the opportunity in the first 2 minutes, probably because your product is not a great product, right? Maybe it's just the way that you delivered it, right? Or that you presented it. And that's what I'm talking about here. I believe that Cardano can be presented in a great way if they're able to kind of segregate all the transactions that are in one transaction and just make that the data point for where the transactions are. So every time somebody says Cardano transaction per second is one transaction per second, you're not saying, well, that's not true, because Cardano transactions per second goes a little bit differently. It's like, literally nobody cares, right? We want to be able to see metrics. We want to be able to see at a glance where these blockchains compete. So at the end of the day, if Cardano wants to change the metric for all of crypto and say, well, we want to look at value transactions versus non-value transactions as well, and the rest of crypto adopts that as well, guess what metrics they're going to succeed at? Those metrics, right? But Cardano's trying to chase these other metrics that literally nobody cares about. Nobody cares about it. I'm not saying that they should be focusing on meme coins. That's not what I'm saying. What I'm saying is they should be focusing on the metrics that people have been talking about for years and that people associate, not just people, companies, governments, Bitcoin in crypto ETF issuers. You know, they understand, right? So if they're researching all these cryptos to see which one they want Wall Street to invest in, right? Or you're a Wall Street company and you're like, which crypto should we invest in? And you start looking at the metrics. You can't put an asterisk here and say, well, Cardano's a different ecosystem, so we have to look at the metrics differently. So we're going to have a 3-hour conversation about all the metrics that are different and why they're different and why Cardano's superior. No executive, no banker, no money is going to go flow that way. It's just not going to, as it has not already done. This is why I don't know why Cardano will not adjust their metrics, right? Or their how they look at all of the data aggregation instead of say, well, we reject total value locked. It's like the rest of crypto is not changing what DeFi metrics they're looking at. They may add some, they may adjust some, but TVL is TVL. This is like when people say, well, Cryptoviser market cap doesn't matter. It's like, in what fucking world do you live in? Yes, it does matter, right? Bitcoin is the #1 market cap. So you're telling me that Algorand is going to hit $1.6 trillion in the next 15 years, and that it's going to have the liquidity and the global usage and adoption that Bitcoin has? No, it's not, right? It's not. So let's look at this realistically. Could Algorand hit #3 crypto? Sure. Is it going to hit #2? Doubt it, because there's other tech that will hit #2 before, even if Ethereum drops out. XRP will, Solana will, but Algorand, not yet, right? So saying it will, that's a little disingenuous. So I really think Cardano needs to really look at this, because this is the last cycle, guys. The next cycle is going to look so different. It's just going to look like companies. There's going to be so many other cryptos popping up. The companies are going to be investing in new chains that they can launch their own coin, build up. And so these legacy chains, it becomes harder and harder to keep up with the rest of crypto. This is why Solana has done so well this cycle. This is why a lot of these meme coins are doing so well this cycle. They're new. Ethereum is old. I mean, effectively, it's old. XRP, yes, there's new invigoration with XRP, but it's an old coin. It cannot do a lot of the stuff that the new coins can do. This is why Solana is succeeding so well. Even in the downturn, even though we're 50% down from all-time record highs, we're still up like, 5x from the low of the cycle, which was $8. And granted, I was wrong about Solana. I've said it many times. I still don't own it, but I was wrong about it. And so we have to remember this. It's much harder as time goes on, as these cycles progress, to keep up with the new tech. Do you think that there's ever going to be AI on XRP? It cannot happen right now. It may be on RippleNet, but XRP isn't programmed or built for AI. And I don't even think they've done development for it, because that's not really what their focus is. Their focus is really on financial transactions. And so going back to the Cardano topic, Cardano has been chasing narratives for a while. A lot of these coins have been, but it becomes harder and harder every cycle forward. So instead of fighting transaction per second metric, instead of fighting the TVL metric, they got to embrace it and invest in getting those metrics higher. Because yes, TVL is important. Yes, if you're a smart contract platform, the number of actual DeFi use cases and the amount of money locked up in those ecosystems is important, because that is the future of finance. And this brings us to the World Liberty Finance portfolio, because this gives us a glimpse into where the big money is investing. They're not investing in, transferring NFTs or meme coins or whatever. Or what was the example here? with hold on. Yeah, the verifying trees that are planted. Like, this is a great example of a use case, but this is not where the money's flowing. The money is flowing into DeFi, Tron, Link, Ethereum, Aave, Ethena, Ondo. This is the World Liberty Finance Trump portfolio. And by the way, the reason I'm talking about this now is because Trump-backed World Liberty Finance buys AVAX and MNT for $4 million as their portfolio losses reach $118 million. So Trump's World Liberty Finance bought 100 and almost 4,000 AVAX and 2.45 million MNT. In total, World Liberty has spent $343 million on 11 different tokens, but every single one is in the red with a loss of $118 million. This is according to Look On Chain. Now, there is some inconsistencies here because if we look at the World Liberty Finance portfolio, we see this big dip off at the beginning of February. Now, if we look at their recent transactions on chain, you can see at the beginning of February, they sold Chainlink for, it looks like 5.27 million. They made about 1.72 million on that in profit. And they also sold Aave for about $5 million and they made 1.65 million in profit. They also sold Ethereum at February 2. They sold $165 million in Ethereum and made $37 million in profit. They also sold Wrap Bitcoin for $48 million, which was an $8 million profit. So they definitely have been selling in, it looks like at the beginning of February mostly, but this is their first buy since then. I think a lot of the losses that they're talking about is because this big drop right here. Because I saw this big drop in February and I was like, wait, why did they make all these losses? A lot of this was because they sold the crypto. And so I would imagine that money is sitting on the sidelines waiting to go back into the market. So I don't know that the reporting is accurate that they lost $118 million. Maybe from the portfolio's record high, but not actually based on the data. But anyway, the reason I'm bringing this up is because this is where the money is looking at, right? Because the same way people trade the market based on what Nancy Pelosi does, the Nancy Pelosi tracker, or the opposite of what Jim Cramer does, people are looking at this portfolio from World Liberty Finance and they're like, these are the things I'm investing in, especially now at the beginning of the administration, right? We saw Chainlink at the White House. No other blockchain ecosystem founder was there. Chainlink founder Sergey was there at the White House and he was able to speak, right? Why do you think that is? Because Chainlink is the link to all of the DeFi ecosystems. So for an ecosystem to say DeFi is not important, it's like, what is going on here? Did we really miss the point of this cycle, right? We're in the bull market, guys. We are in the bull market. And so, but this issue is affecting a lot of ecosystems, right? Fetch AI, it's another one. Artificial superintelligence, they merged last year in, I don't know, April or May. We're almost a year later and there's no product. There's nothing, not even announcements of the products that they're building and the collaboration that they're doing. And so we have to really keep an eye on this for this cycle because this is not only going to potentially give us great buying opportunities, because if we believe in Cardano or Cardano at some point switches and says, you know what, we're going to start metricing our transactions like every other blockchain out here, like the other 2,000 plus blockchains that are live. And that could be big for Cardano because then the Cardano transaction per second goes from one transaction per second to, you know, whatever, hundreds of transactions per second. And the ecosystem doesn't have to fight it anymore, right? Same thing with DeFi and TVL. In fact, we've seen a decrease in TVL since the even the bear market. But we're going to talk about that. I'm going to do a whole separate video on this whole topic about DeFi and the metrics and transactions per second. But I wanted to kind of bring it to you guys here while we were talking about the leverage in the market, the manipulation in the Bitcoin and Ethereum ETFs and the prices there, what MicroStrategy is doing, what the banks are doing. Bank of Korea, not so sure about Bitcoin and the reserve, what the Bitcoin mining companies are doing. Guys, there's so much going on. And, you know, in between all of that, we are also seeing Cardano is about to break free. A breakout above the crucial supply is going to trigger a big move. So altcoins and Cardano have been caught in extremely extreme market swings with high volatility and panic-driven sell-offs dominating price action. Since March, ADA has lost over 44% of its value. Again, a lot of that was because of that kind of Trump tweet. But one crypto analyst recently shared a technical analysis on X, revealing that Cardano is about to break free from a bullish pattern. If this is confirmed, this technical setup could trigger a strong move to the upside, providing much needed relief for ADA holders. And so, again, these understanding what Cardano's doing, potentially the change in their viewpoint on different aspects of the market, and potentially, the price going down in the short term, right? If you believe in the technology and believe that, yeah, TVL does count, but also these non-TVL transactions also count as well. Listen, this could be a great opportunity because I don't think Cardano is going anywhere. And I don't think that the traders are out of this coin just yet. Because remember what we said, the traders are in control, right? They are trading this coin. We see that in the charting. But did they leave yet, right? That was one bit like small little, double pump in an altcoin. Granted, they took profits. But do you think that they don't think it's going higher? I mean, almost every single influencer that I've seen talking about Cardano, non-Cardano community influencers, like just traders in the market, pretty much all of them believe that Cardano is going to hit or at least get close to its all-time record high, $3.10. So we still have about a 4.5x from where we are to get there. And so there's still a lot of bullish sentiment, and there's still a lot of potential to make money in this coin, and not just Cardano, but many of these other coins, if you believe that the bull market is still underway. Anyway, with that, hopefully you guys enjoyed today's video. Don't forget to give the video a thumbs up, hit that subscribe button, and I will see you when I see you. Crypto on.